5 tweets that I found very interesting this week on X and that are going to really support your investing going forward. I'm Eddie from The Corner of Our Mind, and today let's actually borrow from the great minds on Twitter and what they think and what can actually support our portfolio going forward. So let's get started. So the first tweet that we're going to review today is from the long investors. And it says that there are two markets right now, deeply undervalued and dangerously overvalued. So the market will eventually revert back to the mean, but you don't want to have a portfolio heavily geared towards basically the overvalued position. So yes, indeed, so in the market today, so what we are seeing is that we have the AI stocks, for example, which are wildly overvalued, like Palantir, for example, but also like the big tech companies like Nvidia or like Broadcom, for example, that are surfing on this AI wave. And I'm not even talking about Corey, for example, which is basically almost like full-like level. But we also have in the market wildly discounted positions like UNH, Novo Nordisk, Lululemon, PayPal, for example, which are kind of safe haven in a way because they are so undervalued today in the market, especially in a market which has seen so much overvaluation on the highest tech name. And so there's kind of this split in terms of market. And what we can expect going forward, and based on this tweet, is that basically there will be a rotation. I don't know when it's going to come, but what we can expect from the market is basically a rotation from the overvalued stock to the undervalued. And I think that this has started a little bit with UNH, for example. We have seen like a huge investment from a lot of different super investors into this type of stock. And I think that this is going to continue when the AI bubble is going to deflate a little bit. So like positions like Palantir, Corey, for example, are at very high risk to actually deflate very quickly when this rotation accelerates. The second tweet today that I want to review with you guys is the tweet from the short bear, and basically just a quick review of new holdings and just mentioning that new and MELI in Latin America has been really busy in terms of execution. And what we have seen from the earnings of Q2 2025 from new holdings is actually a bit all over the board. So we've seen that like a bit in terms of revenue, a bit in terms of GPM, a bit in terms of net income, for example. And so that's why actually new holdings has been actually jumped by 10% so in the last session of the market. And we can definitely see that both MercadoLibre and new holdings are growing very steadily so in Latin America, and they are very great investment at the moment. So I think that as this tweet is actually showing is that there is great execution from both these names. So in terms of fintech, but also in terms of e-commerce. And we are going to continue to see. And they are just actually using the playbook that we have seen already in developed nations like the US, and they are going to apply that to Latin America. But the real strength of new holdings and MercadoLibre is that they are bringing the playbook, but they are also adapting it to the real market of Latin America. So we have seen that with MercadoLibre, which has been able to fend off Amazon, for example, so in Argentina or in Brazil. And we are also seeing that with new holdings that they are able to actually expand very quickly in Mexico, for example. So definitely, these are very good investment, I think, and they have very good growth prospect. And that's what the short bear is actually highlighting here with these very good and great, I would say, earnings from new holdings. So the next very interesting tweet this week has been by Joseph Carson, and this is about Google and the fact that a lot of companies are very interested into their Google Chrome asset. And so what he's saying is actually very interesting because he's mentioning that if the judge forces Google to sell Google Chrome, it will be actually a huge injustice, and I think actually very the same. So Google built Chrome, they didn't buy it, and they didn't force people to use it. There are dozens of viable alternatives. None of these companies saying they want to buy Google Chrome have anywhere near the same history supporting a product that's big and has been free for so long. Do you really trust the guy at Perplexity or OpenAI with Google Chrome? Should a judge be able to just rip an important asset from shareholders of a public stock and give it to a private company like OpenAI, for example? Well, so basically like the whole point of this tweet, and I think I kind of agree with that, is that it's kind of absurd if the judge forces Google to divest like its Google Chrome asset, because like they have been so great at supporting it and helping others actually also like develop internet browsers through Chromium. And so it doesn't make sense actually in terms of capitalism if like the government cannot just rip assets from you and rip assets from the shareholders anytime like it becomes very successful. And so like if OpenAI and Perplexity were like so great at like software, they could build a competitive brother as well. So I don't think that like it really makes sense to actually forces this type of competition, especially that we are seeing that there is so much competition from Google, especially from Perplexity and OpenAI. So especially, I think that it doesn't really make sense to actually take an asset from one company to give it to its competitor. Otherwise, like there is no point to try to make business in the US. And so I think that's why like this type of practices in terms of legal anti-competitive law are kind of stupid in a sense. But we will see what's going to happen and what the judge is going to say. But I really don't think that it's a good thing that Perplexity or OpenAI can actually leverage their balance sheet and just try to pick some assets from Google just because they have been successful so far. The next tweet, very interesting, from Chris Patel this week as well, is about Tesla. And I think that it's kind of very interesting because what he's saying is that the best lesson I learned a long time ago is when you invest in Tesla, you're not investing in a company for its cash flow, balance sheet, or multiples. You're betting on one man's resolve to make the impossible possible, meaning Elon Musk. The same man will risk his entire fortune to launch reusable rockets and put people into space, build the world's largest charging network, and created profitable EV in the US. So number one rule of investing, don't lose money. Number two is don't bet against Elon Musk. And so I think that there are two things here. The first thing is about not betting against Elon Musk. I think that Elon Musk has been very successful in all his endeavors. And I think that this has been really quite interesting to see like how he has been able to actually push Tesla, push SpaceX, or even X on this matter. And there's also another thing, it's about Tesla itself and Tesla, about the company and Tesla the stock. Because what we've seen is that so far, the stock is actually only supported by the fact that there is Elon Musk and there is this kind of narrative that in the future, Tesla is going to dominate certain industries. So we have seen that with EVs, we have seen that with robotaxis, and we have seen that also now with robots. And the fact that in cars, they are not dominating anymore, and is going to actually pose a lot of different questions going forward if Tesla is actually able to start dominating industries like robotaxi, where there is already a huge competition from Waymo, for example, and also on the robotic side, where there will be a huge competition from Chinese actors like Unitree, for example, but also from US actors like Amazon. And I think that it's not going to be as easy as people think. And the fact that the Tesla stock is still very high in terms of valuation does not reflect the difficulty that Tesla is going to have to actually dominate in all these different verticals going forward. So the fifth tweet that I think were very interesting this week on X.com was from Just Dario when he talked about Chinese or like China forbidding the use of H20 chips in China. So basically what he's saying is that actually Chinese companies are already replacing all the chips from Nvidia by Huawei chips. And he's saying that if you think that Baba or like Baidu and other Chinese AI players aren't already busy removing all Nvidia GPUs they got into their data center, then think again. Well, basically what he's mentioning is that the huge focus from companies like Alibaba or DeepSeek is to really build all the AI infrastructures now from Huawei chip or like Chinese-made chips, because China doesn't want to have this kind of leverage for the US with Nvidia chips. And definitely we will see in the next few years that all Nvidia chips are going to be banned in China and that the whole AI infrastructures is going to be only Chinese-made. And on top of that, what's going to be extremely impressive, I think, is that Chinese AI is going to be very good and even maybe better than like US models, for example. And that's going to shock a lot of different people because there are going to be ripple effects in the US, because this is going to be a huge hit for Nvidia in terms of revenue. Because today, I think that we can estimate the revenue coming from China like around 20 to 25%, especially if we look at what they have like through Malaysia, through Singapore, especially. And so definitely this is going to deflate the AI bubble if the Chinese players, they are stopping to buy Nvidia chips. Meaning also like the ripple effect is that they are going to be more cheap in the US. So they're not going to have that much of a pricing power in the US because there will be much more supply for the demand that we are seeing from the big tech companies. So this, I think, marks the beginning of the deflation of the AI bubble, because there will not be any demand from the Chinese player going forward, because the government is saying that no more Nvidia chips, and no one is going to dare actually go against this. So that's why it was a very interesting tweet and very different narrative than what we have been able to see on the different news outlets. And I think that this is worthy to be mentioned. So thank you very much for your time today. And so basically, this was the 5 tweets that were very interesting today or this week on X.com. If you're interested in other analysis like this one, please check my other videos. Please like this one. Please subscribe, and I see you in another one. Bye.